How's it going, Forex traders? Your favorite Forex trader is back on the screen. I'm back on YouTube again as usual. Guys, it has been an amazing quarter so far, man. I kid you not, Q1 was absolutely solid. We started April Q2 on a very significantly strong foot, guys. It has been an amazing year so far. I don't even, bro, 4 months into the year, yeesh, it's amazing, man. I mean, you guys can testify to it, man, bro. Every single trade we've caught so far banged. For real, it has been amazing. So thank you guys for always supporting me, man. I take absolutely nothing for granted. Matter of fact, I actually owe you guys. Apart from the quality trades I keep calling out here for you guys, I actually owe you guys something, man. Thank you so much for supporting me, guys. Take nothing for granted. Yep. So by the way, if you're just coming across this channel for the first time, this is just a YouTube series where I come on here every single weekend to let you guys know exactly what the market is doing per time. I let you guys know what my stand is on certain pairs that you might actually be interested in. All right, so over the past couple of days, we've had crude oil, deep to at least $57 a barrel, and this was just following the escalating trade wars between the US and the China, and this is obviously affecting the energy demand, and obviously these things will always have its own effect on the market. So I kid you not, should this breakout materialize, we'll definitely see crude oil at least $48 a barrel. But one of the things you need to understand is that as things stand here, the market is pretty much trading too close to demand levels, or it's way too close. All right, so anything could happen at this point here. So what I would actually employ you to do is wait for crude oil to give us one more weekly bearish engulfing candle break below here. That is a lot more convincing, because as things stand here, the market could easily reverse to the upside. Anything can happen at this point because it has not chosen any clear direction here. Yes, we did dip below the blue bar, but apparently the market is not looking like it has enough selling pressure to continue to the downside. So what I would advise you to do is just wait, just chill, just sit on your hands, man, relax. We've got trades. I'm here for you guys. All right, I'm here for you guys. We've got trades, man, so you don't have to stress yourself. So you never really have to stress yourself over one particular pair. We've got options, man. You are subscribed to my channel, you have options. Believe me, you have options. All right, so long story short, guys, I love you guys so much, man. Like, you have no idea. I just love coming on here, man, to just share what I know about the market for real. Like, it's so amazing to see you guys make money with my trade calls. Guys, I get DMs every single day. Like, every other day I get DMs, I get emails. Like, people are just buzzing me like, bro, thank you. You guys are amazing. For real, you guys are amazing. The fact they come on here, you watch me break down chart, you're patient for me to finish, and then you go ahead and execute. The execution part is even amazing, man. I love you guys so much, for real. All right, so back to crude oil. So like I said, yeah, so provided the market still stays on that blue bar, I have no reason as to why I should start shorting crude oil, guys. My business is not to act, I'm here to react. So the market has to act before I actually react. So in a nutshell, if we can successfully break below this blue bar and sustain, guys, sustain, that is the whole point. It's not the breaking that is matter. The main thing is sustaining outside of here. Can we actually break and sustain outside of here? One weekly bearish engulfing candle is good. You are good to go. Whenever you get on your trading desk and you open up your chart and see a chart pattern like this, best believe, yeah, this is how you trade it. Let me just show you guys something real quick. Something I don't actually share in public, but let me just show you guys this last one. So if you see something like this happen here, what you need to do is allow the market breakout in whichever direction it chooses to break out into. Your business is that you're going to trade the market to the tune of the total amount of pips accumulated inside of here, from the height, that is from the base here to the very tippy top of this entire range. I take it again. Anytime you get on your trading desk and you see something like this happen here, what you need to do is allow the market choose whatever direction it wants to break out into. Once it does that, you know for a fact and you know for free that you're actually trading at least to the tune of the amount of pips accumulated from the base of this point to the height of this point. That's exactly how you trade this bearish triangle pattern. All right, so sometimes it happens like this, fold, and the next thing blows to the upside, next thing to come to the downside. Your business is to react in whichever direction the market chooses to act into. Do you understand? Because as traders, we are actually reactive and not predictive. We are not here to predict. We are react. We allow the market do whatever it wants to do, and then we come and then react to it. If you see crude oil break convincingly below $61 a barrel, once I see one more bearish engulfing weekly candle, guys, we are actually good to go. Next level target will be somewhere around this $48 a barrel, if I'm not mistaken, somewhere around here, somewhere all these lows here. So we just target $48 a barrel, and then if that level doesn't hold, then we see this guy collapse all the way to at least $35 or $36 a barrel. But from the way things look, I do think eventually crude oil will have to break out to whichever direction, either to the blue side or to the bearish side of things. But alright, so guys, I do favor crude oil to the downside to the tune of 70%. You are hearing it here first on my channel. Crude oil, once we clear that blue bar, guys, we have free fall, free space all the way to $44 a barrel, and I am quite confident in this because because of the ongoing trade wars, eventually this pair has to pick a side. And I'm actually quite confident in this because, guys, I kid you not, with the ongoing trade wars, man, there's gonna be an effect somewhere or somehow on energy demand. You feel me? So like I said earlier, the only thing holding back crude oil is this blue bar right here. So once this blue bar is out of the way, ladies and gentlemen, we have space all the way to $44 a barrel for crude oil as first TP. But from the look of things, I think we should actually wait. Let's give crude oil 1 more week. All right, let's see. Let's allow the market just play around and then just pick a side. All right, just pick a side. Are you going up? Are you coming down? But I do favor crude oil to the downside to at least 70% because of the ongoing, crisis. And then obviously, when the market is ready, as usual, I'll be here to let you guys know, which is why you must subscribe to the channel, turn on the bell icon, because guys, you see this year, you really don't want to mess with my channel, bro. Like, I kid you not, you are in for a long ride. Like, we've got beautiful trade lines up, man. Like, we've got USD JPY to the downside, all these pairs are collapsing, and you have me here coming on here every single weekend to let you guys know exactly what pair I'm trading and what market is ready for. Actually, guys, I urge you guys to go ahead and subscribe to the channel and turn on the bell icon, because guys, you really don't want to miss my channel this week. Any video I drop is essential. Any video I drop is essential, so turn on the bell icon so that once I drop, you're amongst the very first few guys to see, so you can take action. So you can see there's lots of volatility in the market this period, so you really want to be early as possible. You feel me? So be sure to turn on your bell icon as you do so. All right. So for crude oil, long story short, once we clear this blue bar here, is a free fall to at least $44 a barrel, and then from there we could actually look at the way things are going, and then I'm back here to let you guys know as usual what I do and where I stand. All right. So, and guess what, guys? The exact same way I walked you guys through all the JPY pairs is the exact same way I walk you through this crude oil shorts. Believe me. All right. So yeah, crude oil, long story short, $44 a barrel. Next level target, if this blue bar gets significantly broken and convincingly broken, then we can actually be rest assured that the crude oil will dip all the way to at least $44 a barrel. That's just that for crude oil. Now on to USD JPY. As I said earlier, when I have no iota of doubt that headed to my prime target at 140. I told you guys that after this drop here, we had like 500 more pips to go, and the market is actually en route to hitting 140. All right. So like I said, the market, listen guys, there is okay, don't worry about that. I have no iota of doubt that we're actually going to collapse right through to 140. All right, so we're actually very, very close to hitting our prime target. We actually started shorting this guy somewhere around here, like so. Entries were here. So you've seen me call out the trades. They've gone ahead to play out. USDJPY has been a very good boy. It's gonna have to give us some pips to the downside. Like as I said earlier, guys, I have no iota of doubt that USDJPY is gonna collapse right through to 140. All right, as I said. All right, so we had like another entry somewhere around here, like so. So something above structure, and then actually knock this guy all the way back down. All right, so now moving on, what do we do next on USDJPY? So if you scale down to the two things, guys. If you scale down to the 4-hour time frame, you see that we have a double top here. Now, if you have a double top in a downtrend, that is definitely a continuation chart. This is being taught in depth in the mentorship program. Now, if you see a double top in a downtrend, that is a continuation chart pattern. In this case, it is the continuation of the entire trend, which is actually bearish. Now, I teach these things in depth in the mentorship program. If you see a double top in a downtrend, let's believe that is a continuation chart pattern of this trend. All right. Now, in this case here, the trend is bearish. So best believe a double top in a bearish trend is a continuation pattern, because at the end of the day, this double top faces downwards. Yeah, neckline is broken, it's actually going to continue downwards. Next couple of days, let's see how the market reacts around this neckline. Let's see if he gives a decent entry confirmation. He will be entering this guy again. I personally be shorting this guy again, and my stocks will always come above structure and will not this guy all the way back down. So on the 1 hour time frame, it's not the clearest. I'm not really a big fan of 1 hour time frame trades, so I would actually advise you allow the market just finish whatever thing it is that it's doing, and then once the market is actually very ready to move, then we are actually here to not to free things up. But alright, so guys, from the technical standpoint, I do favor USDJPY to the downside to the tune of 80%. So I'm very quite confident in the fact that USDJPY is definitely headed to 140 without any iota of doubt. So what I need to see is the market needs to pull back into 145. Alright, so you pull back into 145 here, short this guy all the way to 140, and and it's going to be a beautiful, clean, sweet trade. All right. But by the way, guys, if you want to see in-depth analysis of all these pairs, guys, check my previous videos. I did a detailed analysis on USD JPY, CAD JPY, AUD JPY, all those JPY pairs that collapsed nicely that hit at take profit. By the way, if you found value in this video so far, I urge you to go ahead and subscribe to the channel and turn on the bell icon, and then also let me know what you think in the comments. Alright guys, now on to USD CHF. I do actually see USD CHF collapsing all the way through to 0.79. The market looks heavy, guys. The market looks quite heavy. I do see this guy collapsing all the way right through to 0.79500. So if you didn't take this trade with us at the initial stage, which was somewhere around inside of here, that was a simple counter trend line break from here to here. The market just dropped all the way down. So what you need to do is find out where the midpoint of this entire drop is. From here, I can clearly tell you that this is right around 0.86000. That's exactly where the market will be pulling back into before actually continue to the downside. Alright, so but you can go ahead and use whatever tool you use to measure. Long story short, here for USD CHF, what you need to do is allow the market pull back into 0.86000. Let's watch and see how the market reacts. We do not predict the market. Allow the market. The market could easily continue lower because this is heavy. Alright, and one thing I've come to realize in the market is that momentum always, like, price will always flow momentum at the end of the day. Alright, so we had like a significant drop here. This is an engulfing. This is huge. Alright, so basically the market could just thin out and then continue lower. So we have two options here. It's either the market at least consolidates here or pull back all the way to 0.8510, and that's exactly what I think about the market. Yeah, so long story short, so if you didn't join us from this particular drop here, don't worry, there's another chance for you guys. All you have to do is just go down to the 4-hour time frame or the 1-hour time frame. By the way, the standard procedure students actually know how to do this, so you that are just watching, but make sure you grab the course. All right, teach you guys how to go down and scale into trades even on the 1-hour time frame. You make entries, guys. The program covers every single trading style you have, be it scalping, be it day trading, be it swing trading. What you need to do now is just scale down to the 4-hour time frame or the 1-hour time frame. Look for any consolidation somewhere around here like so, and then go ahead and execute this trade. Alright, so guys, long story short, we pull back into 0.86000. We will see this guy drop all the way to first TP, at least recent low, and then second TP, the blue bar. So so that's just that for USD CHF. My third entry will be somewhere around 0.86000, and if I don't see any decent entry confirmation, guys, I will not be trading this pair, guys. I've made a lot of pips on this pair and across the board, so I am in no rush whatsoever, guys, believe me, guys. So the thing about the market is that there's every tendency to get overconfident, because if you win interest here and there, you start thinking, oh yeah, nothing good. I mean, what could possibly go wrong here? I mean, this is financial markets at the end of the day, so you have to be careful. Yeah, you need to be very careful. And as I always say to you guys, leave nothing to chance. Question everything you see the market, question it. If you have a winning trade, question it. If you have a losing trade, question it. That's how you learn. All right, so guys, now onto the XY. As I said earlier, anything that makes the XY break below 105.258, that would definitely send the XY rolling all the way back to 100, and we did just that. All right, so this is also a lesson to you guys, that whenever you open up your charts, you see something like this happen, best believe you see a high. Like this has fulfilled every single technical criteria for an uptrend. A new higher lows and higher highs. Yeah, so this is a low, this is a high, higher low, higher high. So the market also actually continue higher, isn't it? You know, as things stand here, we have just this blue bar and then this trend line holding the XY from collapsing further. Alright, so I'm just watching. So if you are actually long the euro dollar and the pound sterling, actually I would employ you to actually go ahead and then watch your trade, because you're gonna have a pullback. That the XY is actually back in the range. Alright, so and whenever the XY is in a range, the rest of the pairs are the XSS USD pairs always tend to feel the effect. Alright, so best believe the XY is back in the range, and it most likely be in a range for a while, because last time we were in a range, I actually spent like an entire year. We spent an entire year in a range. So let's just see how things go. But for the XY, I do see a pullback into at least 104 region somewhere around here like so, and then a continuation to the downside. Alright, so if this green bar holds, we will definitely see this guy collapse all the way down. Alright, so if it doesn't hold, and then for some reason we start to see a break above this 105.258 region, yeah, best believe this guy is actually gonna rally all the way higher. You feel me? But as far as we remain below this green bar here, there's every likelihood and every tendency that this guy is gonna collapse below this blue bar here, and then this trend line. Alright, so that's just that for the XY in a nutshell. Long story short, I'm actually favoring the XY to the downside. Not really the time to be ahead of myself, so I actually wait to see how the market reacts around this blue bar somewhere around here like so. I do actually think we could see this guy, start to range a bit. I'm not the type to actually go ahead of myself, so let's see how the market reacts around here. Like, so this is a significant level. The market will not break it easily like that. All right, so we might see this guy going to range for quite a while before actually continuing the opposite direction, because as I always say to you guys, the market only trends for only 40% of the time. All right, we had like significant trends so far in Q1, and this is April. So best believe if the market decides to go into a range, it has every right to. All right, so allow the market do whatever thing it wants to do. A pullback into 104 region here, and then if that level holds, we will definitely see this guy, melt all the way back down. But if it doesn't, in the event that we actually see the XY break above 105, which I doubt, if you see the XY break above 105.25 guys, then you know that this guy is actually back in the trend. All right, so I mean it's a really it's a really dicey and funny time in the market, so you really want to be careful. Don't just jump on trades. All right, just be careful, guys. Just take your time, be careful. The market is not running. You feel me? I'm here for you guys, alright? So be sure to leave a like and comment, as well as you subscribe to the channel and then turn on the bell icon. Once again, I remain yours truly, Desmond Samuel. And guys, I leave my email on there, and then I leave a link to my Telegram community. If you actually want to enroll for the mentorship program, be sure to shoot me an email. And then also feel free to check out the Telegram community. It's free for all, guys. Alright, tap in and then come and see what we do in the live and direct. Alright, so